CNBC-TV18, embarking on a quarter century of excellence.
On the back of that, you have most Asian markets which are trading in the green right now.
India may have to change the route of export.
And now for the Nifty Bank, it is the high that we saw, which is 48,219.
PSUs are kind of the, one of the few areas where you can find value.
They're actually not looking at acquiring Shiprocket. In fact, they're only looking to focus on their core business.
But let's take it straight to the first tick on the index. 50 points higher on the Nifty.
Around 21,300. If getting into a long weekend, you want to enjoy Christmas, maybe taking some money off the table at around that 21,300 may not have been such a bad idea.
But this time around, it seems that people are worried that the US election may throw a negative surprise.
But we are hopeful of a bounce back in second half of 2024.
Market has really perked up, right? I mean, it was quite a quiet start when we started things off. It's 130 points in the green right now.
And looking at LIC's shareholding pattern as of September 2023, government owns nearly 96.5% stake and public nearly 3.5%.
As you can see, 16% of the population are the affluent households, and they account for 32% of the consumption.
The markets were holding up at 21,330. There's been a little bit of a dip in the Nifty Bank.
Well, it's a Friday. It's heading into the long Christmas weekend, and it's festive cheer. I mean, you're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 Muthural studios. I'm Prashant. With me, my colleagues Rima and Nigel. And I just want to say that, hope maybe at some point in the next 1 hour or so, we'll be able to we can cut across to the newsroom where there is a lot of activity.
Everyone's busy unwrapping all the Secret Santa gifts. But Christmas colors are red and green, and I think the markets today are more green than red, right? At one point of time, we had dropped 160 points from the day's high on the Nifty, and we managed to recover about 80 points from that low. So we are firmly now back in the green for all the indices now, except the Nifty Bank.
We are, and Nigel, of course, is smiling because he's off on a holiday right? Today.
Long awaited.
It's just the final 60 minutes of this year. And we're off. Final 60 minutes. And it's been a good year for the markets, good year for us personally, professionally.
It's not 60.
We have ERT as well.
So maybe a little more.
150. 150, we're done. We're on the way. But we got the final 60 minutes, so let's see how it goes, because for the time being...
Are you coming back for New Year's?
I'm there on New Year's. I work every New Year's. It's a ritual that I normally take. I like to work on the first day of the year, and from the time I started working at the age of 20, I work on every New Year. So, yeah.
So only next week you're not
But
there.
maybe next year I'll want to party.
All right, well, let us quickly tell you what is going on. I mean, it's been volatile, right? It's been actually fairly volatile. And in some sense, it is like yesterday. Yesterday also, intraday, it was not a one-way kind of a market. There were ups and downs. And today as well, that pretty much is the case. So just as we sort of came in, the markets bounced again, but at one point, it had given up 80 points or so from the high point. The problem seems to be largely banks, right? So the private bank index, the PSU bank index, the bank Nifty, all of it is under some pressure. I'll get to that. There you go. Those are some levels. So today's high on the Nifty is 21,390. And the 61.8% retracement is 21,360. So we already took that out at the day's high, and then sold off almost from 21,400 or so. But, since we're under it, I think that is the first level to take out. That is 21,360 on a closing basis. This corresponding number is 47,690 on the Nifty Bank. By the way, yesterday the Nifty Bank closed above that number, 61.8, but today it's dropped back under it. So, again, that is the level to take out. Not a resistance per se, but, levels on the upside as we move up. And as Rima said, it's more green than red. You got 3 or 4 large indices which are up over 1%. You got the metals index up 1%, actually almost 2%. Real estate is up 1.5%. IT index is up sharply. We'll talk more about individual stocks there. Autos are up 1% as well. So, it tells you that these are large sectors. Mid caps and small caps off the highs, but generally quite okay. And looking up 0.5% and 0.75%. So all in all, not very much to complain, except, if you want to nitpick, you can say that banks were supposed to come back and show some leadership. That ain't happening, at least not right now. Rima.
Well, week to date, the Nifty is now down close to about 0.6%. The mid-cap index is down 1.25%. So it looks like we're going to close the second last week of 2023 with a bit of cuts. There was a lot of sectoral rotation which took place. So money was pulled out of some of the banks, the PSU banks in particular. The PSU banking index down 3% for the week, and it was put into the FMCG basket. And the Nifty FMCG basket was the top sectoral gainer on a week-to-date basis. Intraday, just pull up some stocks, ICICI Bank and Reliance Industries, and that's where you are seeing a bit of a volatility and wobble take place in the last 1 hour.
Well, that's right, Rima. And if you have this combination of metals and PSUs, well, it's making a lot of money. Nalco, you'll pull up SAIL, you put up MOIL, Hindustan Copper, all of them, they have done quite well. So I think this combination is doing quite well. The metal index as well is up close to around 1.6% odd. But let's get in Mitesh onto the show. Hi, Mitesh. Good afternoon. Well, final 60 minutes before Christmas. Tell us what's your view on the Nifty first up, and then we can get to your picks.
Good afternoon, Nigel. I think, I've been maintaining that we'll possibly chop around in the range. So we did get a good bounce back, but we have seen both the indices come off from the day's high. Especially more so the bank Nifty, which kind of tested 48,000 plus levels and then immediately dropped off. So I think it's still a process of consolidation going on. Next few days could be choppy and volatile. The idea should be to buy closer to support levels, which is what we got yesterday, around 46,900 on the bank Nifty and roughly about 21,000, 20,950 on the Nifty. I think that's the support zone which I'm looking at. So right now would have been a good time to take profits. If you haven't still, I think it can be done. But on stock side, we are trading with individual biases. A couple of stocks are still trending on the long side, and one of them is Gas Authority, which has given a good price and volume action. So buy here with a stop at 147. Look for a target of around 160 to begin with. And Jubilant Foods is also breaking out of a good sideways consolidation. So that's a buy with a stop at 570 for targets of 610.
Okay, so on the index, it makes sense to book some profits ahead of the long weekend. But you've got some stock ideas. Let's talk about Allcargo Logistics, which is in focus after the company announced a scheme of arrangement between the company and Allcargo Gati. Mangalam joins in with details. Mangalam.
Well, there has been a scheme of arrangement around announced in the Allcargo group companies. So let's tell you what exactly is happening. Currently, there are two companies which are listed in contention for this scheme of arrangement. One is Allcargo Logistics. The other one is Allcargo Gati. What happens is that Allcargo Logistics, which holds stake in Allcargo Gati, will first demerge their international supply chain business into Allcargo ECU, for which every shareholder of Allcargo Logistics will get one share of this international supply chain business. The remaining business, which is Allcargo Logistics, which has indirect holding in Gati, will then be merged. Gati will be merged into Allcargo Logistics, and for that, shareholders will get 63 shares of Allcargo Logistics for every 10 shares that they hold in Allcargo Gati itself. The reason why Allcargo is moving higher and Gati is not is because if you buy one Allcargo Logistics share right now, you will get one share of Allcargo International Supply Chain business. Secondly, you get direct holding in Gati, and the holding company discount of Gati gets extinguished. As against if you buy one Gati share right now, what you get is, a share of Allcargo Logistics resultant company. So people are choosing to play the entire theme by buying Allcargo Logistics as against buying just Allcargo Gati, which explains the divergence in the share price of both. We spoke to the management, and the management did say that the Allcargo International Supply Chain business in the near future will work through margin expansion and market share gain, as international shipping business is in a bit of a turmoil right now, whereas the Allcargo Gati business will grow in double digits and continue to gain market share because it will be India focused, and at the same time synergies would improve their margins as well, and that explains the move that we're seeing in Allcargo Logistics today.
Okay, thank you very much for explaining that. It's a bit complex. Prakash, do you want to weigh in on this scheme of arrangement which has been announced?
So, good afternoon, Rima. So, I think, what they've done is definitely very productive, or making things very efficient by segregating the two businesses. And if you realize, if Allcargo Logistics, the stripped off, version of the company after taking the ECU unit out, is only focused onto the domestic business, which is the case with Gati as well. So, those synergies will definitely make for a lot of efficiencies coming through. There'll be a lot of overlap which will get obliterated. And interestingly, it is at a juncture where the domestic supply chain logistics business is likely to get completely re-engineered. With so many freight corridors coming into operation in the next couple of years, you will have a lot of scale that will be required to be to lead market share in this. So that's essentially what I think the company is aiming for. If you buy Gati shares, 10 Gati shares get you some 63 shares of the stripped version of Allcargo Logistics. I think even that's a good bet. I won't really believe that Gati is at a disadvantage. Optically, it does seem like that, but it all depends on how much is the ECU unit going to get listed at, because that's where the 1:1 ratio is prevalent right now. But I would definitely believe the synergies will start showing. And one of the two things, whether you buy it through the Gati route or whether you buy the parent company, either of that will probably make sense. But at this point in time, the 8% discount seems quite attractive.
Okay, all right. Hi, Prakash. Good afternoon. Prakash, what are you making of these exchange plays? BSE and MCX have been big outperformers. The underperformer has been IEX. That stock suddenly has perked up, and it seems that around that 140, 150 level, it's seeing some kind of buying interest. I've been studying NSE, which is in the unlisted space, but let's talk about the listed stocks itself. What's your view on IEX? At around 150 as we speak, there's a big green candle that's taken place.
So, Nigel, interesting that you pick up IEX because, it's been ever since there were changes in the regulation where it was likely to lose. It's almost what seemed like a monopolistic position with other players also coming into the picture. There was this apprehension that it may not be able to gain traction as much as it has in the last 3 years, right? Ever since it's kind of got operational. But remember, the space itself is getting so interestingly, favorable for all the players that even if they, it's like we have in the stock markets, we have a duopoly. In the power exchange side, you probably have 3 players where the market share, the leading market share would continue to be with IEX given its, history and presence. So I think it definitely offers value. But I really have no idea how soon they'll be able to realize and come back to their, the earlier glory that they enjoyed in terms of market share and hence valuations. But it could be a slow grind upwards. But at this point in time, it definitely looks like that all these exchanges, the other two, of course, are not available to trade. But IEX will definitely gain on an organic basis. And you could see a 18-20% kind of a improvement in revenue, maybe in the next 12 months, given the kind of mismatch in production and distribution that we have in power.
Prakash, good afternoon. Just coming to you. By the way, one thing on IEX is that maybe in the power space, if you think about it, if you look at power producers, basically the generators, you look at financiers and ancillaries, everything is pretty much done extremely well. The one part which is trading, an exchange, which is IEX, perhaps that is of course far. I was looking at valuations, all these NTPCs and JSW Energy, Tata Power, everything is back at 2007-8 peaks. Peak P multiples. But IEX, of course, is what it is. Remains bombed out. So there is, in that sense, a little bit of underperformance and value there. Piramal Pharma is the other one. Maybe we can put the stock up sharply higher. And management is guiding for high teen revenue growth. So again, post the demerger out of the Piramal finance business, the entity, enterprises entity, stock did very poorly for a long time, but it's done well. I think about 50-60% this year now so far. Ekta is here with details. Ekta.
Thanks for that. Well, no real news which is coming for Piramal Pharma, but just a quick stock check on that. The stock, for example, has rallied over 15%, close to 20% this year. It's up around 120% from its 52-week low, and it's around 30% from its listing price of 200 rupees in October of 2022. They have been meeting investors in the past couple of weeks. A couple of takeaways from these investor meets, for example, for their CDMO business, which is 60% of their sales, they're expecting high teens revenue growth in FY24, 25% long-term EBITDA margin for the CDMO business. Complex hospital generics, which is anesthesia, 30% of sales from that. The focus is the US market with 45% share. They're expanding into rest of the world markets as well with around a 10% share currently. India consumer healthcare, 10% of sales. Brands such as Little's is up 24% year on year. Lactocalamine is up 19% year on year. They are also participating in a joint venture with the pharma company Allergen for ophthalmology products in India. They're expecting overall a gradual improvement in EBITDA margins. Plus, they're leveraging Carlyle's expertise for strategic decision making. The company has also expanded its manufacturing facility. This is the latest piece of news in Scotland as of 18th of December. Debt has been a big overhang. They have reduced debt by around 958 odd crores as of Q2 from the rights issue proceeds that they completed, and the net debt as of Q2 stands at around 3,800 crores. They plan to reduce it further.
Ekta, thank you very much for that. By the way, IT is also doing quite well. HCL Tech, Tech Mahindra, LTI, Mindtree, Infosys, gains of about 1.5% to 2%. But the stock which is surging is Wipro, 6.5% rally on that. In the last 1 month, there has been a lot of reportage about how Azim Premji may be unhappy with the current state of affairs at Wipro, the fact that Wipro has underperformed the industry for the last 3 consecutive quarters. Wipro has reported negative quarter-on-quarter revenue growth in December too. According to the company's guidance, the company could report a revenue decline. Thierry Delaporte, the current CEO, still has 1.5 years of his term still left. But Wipro is clearly the stock which is excited, 6.5%.
Also the cheapest, right, Rima? Now amongst large cap
It's
IT?
largely always been the cheapest compared to HCL Tech and Wipro have been the cheapest. Wipro and HCL Tech now revenues are similar in size. At one point of time, Wipro used to be a much larger company than HCL Tech. HCL Tech has caught up, but it's traded at a discount to peers because of its margins. Infy, TCS, higher margins.
And I think there's a couple of rumors in the market which we'll stay clear of for now till any official announcement comes.
Yeah, absolutely. But Prakash, you want to weigh in on Wipro right now and the fundamentals?
So, we spoke about this the day we heard about the exit from one of the senior, members of the team. And you know where the stock was headed after that, because that's what the market has been really disturbed with in terms of these senior level exits that have been taking place without much of a solution that has emerged. So, from a hope trade to a much stronger, robust position, you'll need to wait for some news flow to back it up. I think the market just latching on to sectors from a, on a rotational basis. So after banking, I think it is IT, and as Prashant pointed out, given the fact that it's traded at valuation which is not very demanding, people believe that money, the liquidity flow could probably support that move more than an Infy or a TCS, which are fairly rich in terms of relative valuation. So I don't think I would still want to buy into Wipro at this point in time till there is some robust change in the strategy, which is very clearly going to lead to a change in the business traction as well.
Wipro always, it finally crossed the 2000 high. I remember it was in 2021, right? I mean, after 20 years, it crossed that 2000 high. But, the high back in 2000 was 400 rupees. It's at 460 now after 20 years. So it's quite incredible. Well, we'll see. I mean, in terms of what happens here, and it's also the fact that because everything is done so well, people are looking for ideas which have not done well as we enter the next year. Some degree of comfort, and you throw in the potential possibility of some efforts to turn the business around, etc., etc. I mean, that could be a good combination to have. We'll take a quick commercial break here. We'll come back, and Prakash, of course, stays with us. We'll also have Aman Chauhan joining in from Abacus Asset Management on the other side. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. The mid-cap index is up 300 points. It's a 0.6% rally for the mid-cap index. Strong advanced decline ratio. Fertilizer stocks are seeing buying. So NFL, Chambal Fertilizer, as a pack, you can see gains of close to about 5%. SAIL, metals are doing well today, and SAIL has seen a sudden spurt in the last 30 minutes. So there is a rise there. On the losing side, Varun Beverages has come in for profit booking. The stock has fallen close to about 5% after yesterday's up move. And a couple of these banks, IOB, Canara Bank, City Union Bank, South Indian Bank, are under pressure. But another stock which is on our radar today is Tata Motors. In fact, Tata Motors is one of the top Nifty gainers today, and this is on the back of bullish management commentary for the electric vehicles. The management sees EV volumes growing by 30 to 40% in FY24. Listen in to a conversation or excerpts from a conversation we had with the MD, Shailesh Chandra.
These are the first two stores, and I'm sure that in the coming 12 months to 18 months, we would have covered most of the large cities where EVs have already reached a certain size or are going to grow in future. In the next year, we are going to also launch 3 additional EVs, which would make it a portfolio of about 6 products. ICE market has been very strong in the last 2 to 3 years. In fact, post-COVID, every year we are seeing that it has been posting very high growth. In FY23, we saw a growth of nearly 25%. That was very high growth by any standard. And this financial year, we are seeing that the growth has moderated, but on a very high base to a single digit. And we believe that a level of 4.1 million volume is a significant volume and very healthy volumes in the industry. And I'm very confident that this kind of level of demand will sustain. काफ़ी सालों से हम लोग ही मार्केट हैं ईवीज़ में 80%, 70 अभी भी हमारी मार्केट शेयर जो है करीब 75% है। हमारा फोकस है कि हम लोग डिमांड क्रिएशन ईवीज़ में कैसे बढ़ाते जाएं, कैसे नई नई कारें लाएं, नई सिटीज़ को ओपन करें, चार्जिंग इंफ्रा को कैसे उसका विस्तार करें, इस पर हमारा फोकस है। तो कोई मार्केट शेयर का टारगेट मैं नहीं लेकर चलता हूँ, बट हाँ ये ज़रूर है कि हम लोग पेनिट्रेशन पे फोकस कर रहे हैं। अगले 3-4 वर्षों में हम लोग 25% पेनिट्रेशन की तरफ देख रहे हैं और दशक के अंत तक हम लोग 50% पेनिट्रेशन का एस्पिरेशन रखते हैं।
Okay, all right. Looking at making their presence felt out there and looking at higher penetration, that's the word that's coming in there. Prakash, what do you make of Tata Motors? The stock has already been a big mover. If I recall correctly, during COVID lows, it was a tenth of what it is today, $70 odd. Today, it's 725. Wow. What do you do with the stock at 725 now?
So, Nigel, if I tell you that, it's worth looking at buying, even at these elevated levels, it might come across as a surprise coming from somebody who tracks value and fundamentals. But let me just tell you quickly what's happening to Tata Motors. There are two things. Since you focus on EV, let me start with that. In the EV ecosystem, they have a group company that can give you charging infrastructure. They have a group company that can supply battery equipment from the chemical side. They have a company that can fund these cars, right? And the pattern of usage that they have been able to sit on in the last 1.5, 2 years, that they've only sold EVs. As I said, we are the market. Now, that gives them the gumption to be able to launch cars at different price points and offer different ranges, which is going to be very critical. So if I'm buying an EV and if I'm not very sure of whether this range is optimal for that price that I'm paying, I'm not going to buy this. So rest of the players will find it much more difficult to get that sweet spot, but Tata Motors probably is better poised to do that. So from here on, their market share would continue to be very robust and the margins improve as the cost of EVs goes down. And the second thing which is going to change for them is the debt reduction. Come March, you'll be surprised at the deleveraging, the lean balance sheet that they will announce. That net debt, reduction that they spoke about is actually happening. So I think you could do very well from here on. Even in the next 6 to 12 months, it could go anywhere close to 40-50% of an upside, which is fairly aggressive as a target. But I'm quite positive on it ever since it crossed that 660, 670 zone, which was a congestion of sorts. And there's absolutely no stopping for Tata Motors at this point in time.
All right. Prakash, thank you very much. Great speaking with you. Appreciate you joining in, and it's a pleasure. Well, that's Prakash Devan with thoughts on the market. Aman Chauhan is with us from Abacus Asset Management. Aman, good to have you with us here. Thank you very much. We're speaking at a time when the market had a very sharp run-up. The last 2 weeks, there was the local event of elections, and then there was the global Fed change in direction. This week, the rally continued, except that one day, a day before, when we had a bit of a scare. How are things looking now, Aman, and what have you been doing at Abacus?
We have been gradually deploying cash, holding that we had, and taking all the opportunities in the market. Whenever there is a correction, we are using that correction to deploy cash. Frankly, there is not much of reason to be fearful in the market, except that it has run up too fast in the near term in the last few months. But if you look at any economic numbers, if you look at any data point, things are looking good from a local perspective. Till the time global events don't scare us, I think locally there is nothing to be fearful about, and hence we remain optimistic on the market. Just that this is not something which is a very cheap market. It is a fair market zone, a fair valuation zone, and hence from here on one should be careful in deploying capital, which I have been doing. So we are gradually deploying capital using corrections like the way it happened a few days back to commit more capital is what the broad strategy has been.
So do you want to tell us, this week we had that big fall. Which were the themes where you did deploy money?
So incrementally in the last 1 month, we have deployed the cash into renewable space. We have deployed cash into buying companies in the engineering space. And we continue to remain positive on financials. So that is where the bulk of the incremental money has gone, especially in the last month or so.
Okay, all right. What about the metals theme? You all have got it right on numerous occasions. What's the view out here? The reason I ask you, Aman, is because China, if it bounces, the spreads are at record low levels and they're exporting big time. If both of them turn around, that could be an additional fillip for the ferrous space. Your view?
So we are very selective on the metal space. It's a global commodity, and hence we feel that we are not experts in the global commodity front, and hence we have a limited exposure. We have a positive on metals. Metals currently would be, say, high single-digit exposure in most of our funds, and we are comfortable with that holding. So even 6 months back, we had a similar exposure. As we speak, in spite of the price going up, we are maintaining those kind of exposure in the metal segment. And the view remains the same. There can be a potential upside from China coming in, and that's the reason we continue to stay invested in this space.
Aman, one of the things one can I'm just sort of referring to some of these moves that we're seeing, right? Wipro, for example, is sharply higher. Are you as you look into 2024, look at what else to do, etc. It's hard to find stocks which have not done well, right? Is that one way to go? Are you doing that when you look at themes, etc.? I mean, what to buy? Maybe relative underperformers. There were many of them as we came into 2023. As we exit 2023 across sectors, there's not very much. So just wanted your thoughts there.
Sure. So what happened in the utility space a few months back is a classic example of relative underperformance, where the sector had not moved and hence people came in and it got re-rated. It's a bull market, so this phenomenon I think will continue in the coming year also. So wherever there is relative underperformance, for example, chemicals. Chemicals as a sector has not done well over the last 12 months. And for the reasons that we all know, that there has been earnings downgrade in that sector. So has been the case with IT. So I feel that these two sectors in the next 1 to 2 quarters, once investors start to see things bottoming out or starts to look up, they'll start and come to participate. IT has in general, post the last few days once the Fed meeting happened. But chemicals is something that can definitely we can look at these levels. And even financials, large cap financials, the large banks, HDFC banks of the world and the big private banks, they also have relative underperformance. So that space is also looking good. So while broadly financials have done well, the mid and small cap banks have done well, on a relative basis, the large cap banks are still offering value and some bit of catch-up rally still pending there.
In chemicals, Aman, is it, I mean, just a tactical bounce that you're hoping that you think will happen, or has it turned the corner, in your opinion? The big issues of too much inventory and prices, dumping from China, all that is, we've turned the corner there?
Yeah, for the chemical is almost there. Though it will remain volatile, we're not going back to the previous highs. But even if they recover from the current levels, I think there is money to be made in the sector.
What about insurance, Aman? There is this new proposal, a draft policy by the IRDAI, where they're looking at higher surrender charges. And if it does come through, it will hit the margins of insurance companies. And stocks have struggled over the last few days, fearing that. Would you be fearful of insurance? Were you holders, investors in insurance companies? Would you look to pare it down because of this development, potential development?
Currently, we have exposure only under the life insurance segment. We are not in the general insurance, and within that also, this is a mid-single-digit exposure that we have. So we are also keeping our eyes and open as to how things develop. But for now, staying put, not taking any specific action in the sector as such.
Okay, Aman, I wanted your view on these PSU themes. I'm going to put out a piece in the next couple of hours on the channel itself, that the entire PSU basket put it together was 15 lakh crore. That was close to around 3 years ago. And today it's 50 lakh crore. So you'll say, wow, it's gone up by such a great deal. But the story is like this, that the profitability has gone up by far higher multiple in comparison to what the market cap has gone up by. How would you approach this space?
So clearly this has happened because there has been a clear government focus to revive many of the sick PSUs, to improve their profitability, to get in management, get them listed, make it professional, and that is what is getting reflected into the profitability, and the re-rate in the market has happened. So one, there was obviously a relative valuation gap between the private and the PSU sector, and few PSU names have also done well. The way we approach this, we are selective in our PSU exposure, so we don't have exposure in the segment where government is in total control, where the orders as well as execution, everything is in government control. We would like to get into a PSU where government is hands off, or they just have a majority or a minority holding, and not the complete business is dependent on government. So classic example is PSU banks. So we do have exposure to PSU banks. We don't have much exposure to PSU defense, because in that the whole supply chain is controlled by the government. That is too much of a risk to take. It made sense at single digit P, but now with 30, 35, 40 P for most of the PSU defense stock, it doesn't make sense. The risk reward is no longer favorable in that segment. So we are pretty selective in what we do. We also like the space, but so far it's been more of PSU banks for us and selective small exposure again in the other PSU names. And I think in the near term, we like to maintain this stance.
Aman, another bullish bet which the market has taken is on capital market plays, whether it's exchanges, wealth management companies, AMCs, and stocks have done phenomenally well, re-rated completely. Would you bet on them at these levels, or do you think the markets have priced in too much?
I would bet on these. So non-fund-based financials as a space is something that we like. In fact, in the last month or so, we would have increased our exposure to the wealth management companies. And the space is still looking good. These companies will be trading anywhere around 20-25 P multiples versus the, you can say, other sectors which are upwards of 30-35 P. So there's still scope and to go well with this sector. And if market continues to do well, there's a, you can say, an operating leverage which comes in, there's profit growth, and the multiple also goes higher. So it's a perfectly high beta, you can say, sector to be in. And being high beta, we are also very selective, right? So we just increase our exposure, and that is still, say, low single digit that we have. So we are not going to have a very significant holding because it's a high beta sector, but it's still looking good. And that's the reason we added on to this segment in the last month or so.
And there's still upside, according to you, in these. You're looking to raise your exposure further from the mid-single digits?
Marginally.
Marginally, okay.
All right, Aman, we'll leave it there. It's a pleasure having you with us, speaking to you. Have a wonderful holiday. And of course, if we don't speak before the end of the year, into the new year, wishing you all of the best to you, your family, and of course to the Abacus team as well, from all of us here at CNBC-TV18.
Great. Thanks for hosting us, and wish you all the same.
Thanks very much, Aman. Well, 100 plus points on the Nifty is what we have, and 21,360 exactly that level where the market was earlier, which is, of course, also that 61.8% retracement, exactly there as we get into the fag end of the trade today and this week as well. 20 minutes to go, 25 minutes to go for market closing. We'll take a quick break here and we'll come back. We'll come back and tell you what to buy or sell today for a reverse trade when we come back on Tuesday. Monday, of course, remains a holiday. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, from the broader markets, a couple of big movers that we have seen. Polycab has moved to the low point of the day. That's seeing selling because of their ongoing raid out there. So that stock is under some pressure. India Cements has actually lost its way. It was up close to 2%. Now it's moved to the low point of the day. And on the flip side, we have Torrent Power that's moved higher as we speak. So Torrent Power should come up for you on the screen. Well, Mitesh is back with us. Mitesh, pretty good trading session, I would say. But the Nifty bank, that's a bit of a cause of worry, right? Though we saw it take support at around that 47,000 odd mark. So view on the Nifty bank and then your picks.
So on the Nifty bank, Nigel, it's kind of come off strongly from the day's high. And we had talked about choppiness. I think the support area for the Nifty bank comes closer to about 47,500, 450 zones. If that breaks, then I think there's a good chance that we are heading lower to about levels of 46,700. So I think it's still be a range, but 46,700 is a possibility. And on the upside, 48,000, 48,200 now becomes an immediate supply. So I think it could be about roughly about a 1,500, 1,700 point kind of a range. On the Bank Nifty. On the stock side, BTST on Glenmark with a stop at about 832 for targets of 850, 855. And the other one which I like is Godrej Properties it's bouncing back after a decline. So that's a BTST with a stop at about 1961 for targets of 2000.
Okay, thank you very much for that. The Nifty is up 100 points now. It's not at the day's high, but pretty close to it. 21,350 plus on the Nifty, 100-point gain, with the Sensex up 200 points. Up Data and Signature Global. These are two stocks which are on our radar. There have been some fresh brokerage notes on it. Upasna joins in with the details. Upasna.
Well, first up is Updata Services, and IFL Securities has given a buy rating with a target price of 418. It says that the company is a leading integrated business services platform provider with two segments mainly: integrated facilities management services and business support solution services. When in terms of IFM segment, it says that it should benefit from overall economic growth, higher outsourcing and market share gains. In terms of BSS segment, it comprises mainly of value-added services that entail significantly higher margins and lower working capital compared to the IFM segment of the company. In terms of EBITDA margin expansion, the brokerage says that it will be mainly led by steady improvement in IFM segment, and recovery in the BSS margin will be mainly led by revival in the IT demand. The company's strength lies in the BSS segment, which will drive higher wallet share of the customers going forward. It also estimates an adjusted EPS CAGR of 21% over FY23 to 26. Well, next up is Signature Global. Kotak has initiated coverage with an ad rating and fair value of 910 rupees. It says that the company has grown rapidly to become one of the largest affordable and mid-income housing focused player in the NCR region. The company's pre-sales have also grown 8 times between FY20 to 23 to almost 3,400 crores. And it expects the company to deliver a 26% CAGR over FY23 to 26, with improvement in the embedded margins to almost 20% as it focuses more on higher margin mid-income projects.
Okay, thank you very much for that. Let's address each of these one by one. Updata Services first. The stock is at 350. The issue price for the company was 300 rupees. Sudeep Bandopadhyay of IndiTrade Capital is now with us on the show. Updata has this traditional business model of facilities management. That's one part of the business. But they've also been making a lot of acquisitions, which they categorize comes under the business support services, BSS, which for them is higher margins. So whether it's audit and assurance or sales enablement, B2C calls on behalf of companies. The problem is that whatever you do, the margins are going to be on the lower side. Do you see a lot of upside in Updata and the kind of valuations it's trading at?
Well, there is absolutely no doubt about the fact that managed commercial real estate has become a reality in India. 10 years back, there were very few managed commercial real estate. Now, management of facilities are becoming bigger and bigger. So the opportunities are increasing. But the fact remains of what you said is that the margins are low and they're getting squeezed further. The valuation at which the company is quoting, I think, is fair value. I don't see too much of appreciation opportunity here from, unless there are new services which are higher margin, which they are trying to get into, really pick up in the near future.
Hi Sudeep, good afternoon. What about Signature? Any view out there?
I think overall, Nigel, the real estate pack has been doing well, and definitely the expectation is that the interest rates are going to come down in India in the near future, and that significantly helps lower and middle income housing. So Signature Global operates in that space in the NCR region in a big way, and obviously the benign interest rate regime will help them even further. So Signature Global, yes, along with our view on real estate has been positive for the last 12 to 18 months, and we continue to maintain positive view on well-managed real estate companies.
Mostly been on the premium end, but Signature is on the sort of lower income end, right? Which someone told me that they built houses, right? And they showed a video, 12.5 lakh rupees in Gurgaon it was a 1 BHK. But it's incredible. Not very far. I'm not talking about the early 2000s or something. I'm talking about 3 or 4 years ago. Oh. And it looked I said, well, how do they do it? And I mean, they actually did it. HDFC had a stake in, I'm not sure if they still have stake, but they sold in the IPO, you know, some of the stake. Partial, I think they you know, part of it was an OFS, and HDFC, of course, sold some stake. 100 points, by the way, is what we have on the Nifty, 21,356 or so on the index at this point in time. Sudeep, you know, apart from what we've discussed, anything else which looks interesting, worth pursuing at this point?
Well, for the new year, Prashant, I will say one needs to definitely look at two sectors which are down and out. FMCG, I won't say down and out, but there hasn't been any action in the FMCG pack. And I believe that's got a lot to do with you know, subdued rural demand. Our belief is that rural demand is going to gradually come back. And you know, by the time we have the general election, I think rural demand will come back properly. So the companies which cater to rural market and significant part of their income comes from rural India are HUL and Dabur. I think these two companies will disproportionately benefit out of rural revival. And I think these needs to be looked at current level. Other FMCG companies also can be looked at because it is one area which hasn't seen much action in the last few rallies, which we have been witnessing for the past few months. The other area which I think I would like investors to start looking at and start taking contra-bet is the specialty chemicals and chemical space. I think this is a bombed out space. I mean, the results were terrible. Quarter on quarter, they kept on, you know, kind of dissatisfying and making the market feel bad about the performance. But I think somewhere in the next calendar year, we will start seeing the turnaround. Now, whether the turnaround will happen in the first quarter or second quarter, I'm not sure. But for a you know, a little aggressive long-term investor, probably these are the best opportunities for picking up good quality specialty chemical shares. So, you know, from my point of view, SRF or even an UPL at current level can be looked at for a long-term view.
Interesting. SRF or UPL. We'll keep an eye out on that. But Sudeep, I wanted your view on LIC. But first, let's get my colleague Upasana in. The stock is higher in trade today because they have got an extension with regard to the period that they have to comply with the MPS norms. Upasana, tell us more.
Well, LIC is a stock that remains in focus today. Government grants one-time exemption to achieve 25% minimum public shareholding within 10 years from the date of listing till May 2032. According to the SEBI norms, all listed companies are supposed to maintain minimum public shareholding of 25% within 5 years of listing. And looking at LIC's shareholding pattern as of September 2023, government owns nearly 96.5% stake and public nearly 3.5%. Well, it is important to note that earlier this year, government had notified that it can now exempt any public sector enterprise from minimum public shareholding norm, which mandates at least 25% of public float for all listed entities. Well, the company has also indicated in terms of its future plans that government is likely to sell stake in tranches and dilute smaller portions.
Okay, thanks for that, Upasana. Sudeep, what do you make of it? They've got an extension, but the stock is still a far cry away from those who got in the IPO. What's your advice at around this 800 rupees?
No, absolutely, Nigel. I think, you know, there are two things. One was this overhang, because, you know, in terms of the current regulations, government had to sell to bring down the shareholding in line with the regulation. I mean, we all pretty much knew that that's not in the cards, but that overhang was there. So with this clarification and this change, I think that is out of the way. We have time till 2032. So government will be in no hurry to sell further shares. So that's pretty good news. But I think what I heard from LIC a few weeks back is what is interesting. Complete digital initiative. They have put a very nice name to it as well. And they're talking about, you know, the real digitization of operations and smooth process for LIC. Now, you know, one of the biggest challenge with LIC when they were competing with private sector was the lack of, you know, the digital or smooth process of, you know, the interaction when a customer was interacting was not smooth enough, which probably they were getting in a lot of private sector competitors. Now, if LIC can take care of that part of the, you know, the operation, and that part of the customer experience, I think there will be significant opportunity for LIC to at least stem the rot and stop losing the market share, which they have been losing consistently over the years to the private sector competitors. Now, if that happens, I think over the years, considering LIC otherwise is a well-managed company, they can start making tangible progress. One other factor I wanted to point out is that IRDAI's new regulation on increasing the surrender value will hit pretty much all the private insurance players as well as LIC. But in case of LIC, I think it's better off the worse. So LIC will be better off because others will be also hit significantly. So I think good times for LIC is probably beginning. So from an aggressive investor's point of view, I think biting into LIC at this stage may not be a bad idea. I'm not saying things will change overnight, but if you are a long-term investor, LIC, you can't go much wrong in buying LIC.
All right, we'll take a quick break here, and on a lighter note, the smooth interaction you need with insurance companies, of course, when you buy policies, as you said, Sudeep, but when you want the money back, at that point you want really smooth interaction, and it really flows through nicely. We'll take a quick commercial break. Sudeep, of course, is still with us. Markets up, it's teasing 98, 99 points. Will it be a triple-digit gain by the end of it? That's the question. We'll take a break. I'll see you on the other side.
CNBC-TV18, embarking on a quarter century of excellence. embarking on a quarter century of excellence.
Okay, well, welcome back. 88 points, by the way, on the Nifty is what we have, and 21,340 on the index at this stage. Just a few names that I was just talking about, and these are some big movers. Maybe we've not highlighted these. So pull up AstraZeneca. I think stocks got very large volumes, unusually large volumes for a name like that, and very strong price gains. On your screen, not AstraZeneca, the pharma company. Transformers and rectifiers is another one, which is, I think, limit up. We had Madhu Khela, I think, about in September on the program here, talking about transformers and rectifiers as one of his top ideas. I think, he's got some percentage stake there. We have, what else? JB Chemicals, which is a very strong mover. A government PSU name like Barmalori. I think that is limit up with very strong gains, and of course some of the others we've been highlighting here for some time. Sudeep, any thoughts on Castrol? If you want to come in, again, it's one of those rare names which is not, from the lows it's done well, but overall not very much by way of price performance. Castrol India.
I'm surprised, Prashant. In fact, if you compare it with Gulf Oil, I think Castrol's performance has been very subdued. I think after many, many years, we are seeing some kind of movement. Today it has moved up, of course, but if you compare with the market, it is very subdued. Probably the time for Castrol is now coming, and some kind of upward movement in Castrol from even current level is probably expected. Having said that, I will say that there are many better areas and better stocks to focus on. It's a well-managed company. There's a fantastic brand. They're doing a lot of right things. But, the growth hasn't been that exciting, and the market hasn't. That's the reason probably rewarded the share in the market.
Sudeep, we'll take your leave on that note. Merry Christmas, and thank you very much for joining in. Castrol has been in a range of 100 to 160 for the last 5 years. Hormus's data shows that in the last 5 years, there have been 4 instances when Castrol has gone up to levels between 160 to 162, but it keeps retracing. And today, finally, we are once again back at that 162 mark. Let's see whether we can break out from here. But as the market comes to a close, we gear up for the long and festive weekend. Mangalam gets you a list of things that you could do and the places you could visit. Mangalam.
Well, Santa Claus is coming to town. It depends on which town you are in this time around, because for me, Christmas, usually the best place to celebrate Christmas in the country has to be Calcutta. If you're in Calcutta, go to either Theatre Road, Park Street, all these places, beautiful lights out there, and everyone just making a lot of merry. If you're in Mumbai, then I would, let Nigel talk a lot more about this, because Nigel's the king of Bandra, and Bandra is the place of Christmas out here. My personal favorite in Bandra is the Damien furniture store, which does a decoration on its, window every time. So every time you go there, you have to visit that. There are a bunch of things which are happening in a lot of malls and hotels as well, which is in Geo World Drive itself. If you are in Delhi, go no further than Khan Market, because there are a bunch of cafes, clubs, restaurants. Delhi winters and Christmas lights around Khan Market, the best place to be. If you're in Goa, you don't need a reason to be, whether it's Christmas, whether it's summer, whether it's winter, Goa is always very good. If you're in Bangalore, great weather. Walk around UB City, MG Road, Brigade Road, all these beautiful Christmas lights. If you're not doing any of that, you're watching movies, etc., then there are 2 movies which have released. Donkey, not so great in terms of reviews, but again, it's Shah Rukh Khan, you got to watch him. And then there is Salar as well. Apparently, Prabhas is one of the best performances that you have of his. If you're not going to the theaters, just want to watch something at home, then From the House of Excel Entertainment, written by Zoya Akhtar, based on life around social media and content creators, something a lot of people right now may resonate with. Kho Gaye Hum Kahan, getting good reviews of all the things that I've read, starts streaming on Boxing Day itself. And if you want to, do nothing of that, just sit with family, watch a stand-up comic gig, then Abhishek Upmanyu has released his stand-up special. And this I can vouch for myself. I watched it yesterday, a 40-minute laugh riot called Employee Number 1, about life in corporate world itself. And if you want to do nothing of that and watch good old cricket, then you have the first test, India versus South Africa, starting on December 26th. For the first time since the World Cup finals, Rohit Sharma and Virat Kohli take to the pitch. And if you're not watching India versus South Africa, then perhaps Australia versus Pakistan, the real Boxing Day test. Guys, What are your picks here?
Well, you're doing none of this, right? You're off to Rajasthan.
I'm off to Rajasthan, but I will do any of those things which are streaming online, maybe spend some time with the family and eat a lot of food. That's what a lot of people do, I guess.
Kho Gaye Hum Kaha looks quite interesting. So thank you for bringing it to our notice.
I don't know about Kho Gaye Hum Kaha, but I know one person will be khoya throughout the Christmas weekend is Nigel. Nigel, you're off on a long weekend. What are your plans?
A long weekend. Going to spend a lot of time with the kids. I'll be going to Geo Mall as well. And Damien and Bandra. I have never traveled for Christmas because I live in Bandra, and Bandra is really the place for Christmas. You can go through any lane, it'll be lit up. So much to do with the kids. I'm painting Santas everywhere. So my kids are asking me which is the real Santa. So yeah, but fabulous times.
So do we see you come back with a lot of goodies in the new year?
Yeah, that's possible.
All those Bandra sweets.
That's possible. I was a little under the weather. Otherwise, I normally do it before Christmas, but maybe this time we'll do it in the new year.
Are you going to dress up as Santa for your kids? No. The real Santa? The one who's going to put
my
the
son just told me, teacher came in and I don't know why she dressed up as Santa.
What are your thoughts?
You said if you don't want to do this, if you don't want to do this, I'm confused now. I think I'll go back and watch this again. And then
I think Prashant is going to be sitting with his malt, some nice music.
That's the real Santa Claus.
But thanks so much, Magalan. That's a very crisp kind of primer on what all you can do and what our viewers can.
Make sure you reach Rajasthan. She's waiting for you.
All right, we'll take let's just quickly wrap up the market, right? And the market wrapped itself up. 76 points, maybe just a quick word. 80 points, by the way, 21,330 is where the Nifty is finally left off at. And so not at the day's high, not quite 100, but 76. But can't complain. Nifty Bank ending, actually the Nifty Bank ending 0.8% lower. And that is almost at the day's lowest point. I mean, about 10 to 20 points away from the day's low. And I think the mid and the small cap indices, they are up 0.5%, 0.75% or so. So can't complain. For the week, slightly down, about 1.25%.
Well, on that note, though, we'll wrap up on this edition of Closing Bell. And it's, a wrap for me as well. Thanks so much for all your support in 2023. I'll see you all in 2024. For the time being, our Friday special, Smart Money, comes up next.